You're listening to The Whole Truth, a Resources Rising Stars podcast.
Hello and welcome to this episode of The Whole Truth podcast. I'm Paul Armstrong. It's been a bit of a rough week for investors on the share market and the resources space. Some horror announcements from some of the bigger companies. Poor lithium prices have been taking their toll. BHP and Rio have certainly rocked people with lower than expected dividends and the like. But there's one man who stands out from the pack this week. That's Dorsch. He's the managing director of Chalice Mining. Not to say Alex hasn't had his rough times too. 18 months or so ago, he published a scoping study on the company's Gonneville Project, and the market didn't like some of the costs and where it was going to. He's been busy behind the scenes, and wow, hasn't he turned up something for the books this week? They've announced a new flow sheet for the treatment of their metals coming out of Gonneville. Metallurgy can be as complicated as you like, but the simple solution here is that this will cut operating costs, it'll cut capital costs, and certainly de-risk the project. Alex says he's back in business. He's a man with a new chemistry set. After applying a whole lot of tests in pilot testing, he now says he's up and away. The project is now well back on track. A PFS is due around the middle of the year, and he's eyeing the advantages that are coming with the turn. And he says the market's turning in his favour. The shift to hybrid vehicles means the demand for palladium is growing. He's also seeing the Trump tariffs and the geopolitics as being to the benefit of Chalice and Gonneville. So he's got the wind back in his sails. He's up and away, and he takes us through why this week's announcement was so important, why the market loved it and put the share price through the roof when it was announced, and what he's going to do next. Alex, what a cracking week. Your share price is up by about the same percentage as Mineral Resources share price is down, sort of circa 25%. How does that make you feel?
G'day, Paul. Yeah, no, good feeling. Good start of the week. Yeah, it's been a pretty tough 18 months for the company and our shareholders. So great to really have some good news to share, and great to see the way the market was. You know, it was just very easily digested, and the response was rapid. So yeah, no, good week.
Arguably, you've been the star of the week. You're probably one of about the only bit of good news investors in the space have had this week. There's been blood on the street. BHP and Rio rocked the market with some underwhelming results. Big losses in the likes of IGO, Pilbara Minerals on the back of the lithium price. We all know about the woes at Mineral Resources and Chris Ellison, etc. Stock down about 30%. Chalice shares are up 25% on the back of this announcement. Why has the market loved the release so much?
Yeah, look, maybe we've been a little bit ahead of the trend, but yeah, we certainly felt the downdraft of the drop in nickel and palladium prices over the last couple of years. But really, I guess one of our key challenges with our project, you know, it's a big beast of a resource. You know, it's a nickel, copper, PGE sulfide system, and for those who understand these systems, you know, they are very unique. Each one of them has different characteristics, different minerals. So you can't really apply a cookie cutter or sort of top-down approach to the metallurgy and the flow sheet. So one of our big challenges has been the nickel side of the flow sheet. We just weren't ever able to generate a saleable product, you know, using simple conventional flotation techniques. And as we said at the beginning of this week, yeah, we've now resolved that issue. We can produce saleable nickel concentrate across the full grade spectrum, which is a big deal, because there was a big chunk of the resource that was problematic from that perspective, and now we've really gone and solved that. So we can produce saleable copper nickel concentrates, and then we'll get additional palladium and gold recovery out of the flotation tails by using just standard gold industry techniques. So we've got a flow sheet now that is, you know, it's a reset of the project. It's a dramatic change from where we were forced to go over the last 2.5 years, which was down the sort of the hydromet route to really upgrade that nickel to a saleable product. So nice to really simplify things and really, you know, reset the project with a much more simple, cheaper, more efficient, more easily, you know, executed flow sheet.
But speaking of simplifying things, I mean, metallurgy is about as complicated as it gets in the mining, the resources game, isn't it? And let's just take people through what it is that you've announced in terms of the product that you will now produce, or the products you'll produce, versus what you were going to do when you put the scoping study out some time ago. Now, the scoping study, it's fair to say, sort of rocked the market in the sense that the costs of building the project and operating the project were deemed to be high, and of course that contrasted at the time with falling prices for the product. So you took a double whammy. Since then, you've been head down at it. You've gone down a completely different path. You've said, okay, let's abandon the hydro extraction process, which is a complicated process, isn't it? It's expensive in terms of building the plant. It adds to your operating costs once it's up and running. You've actually gone this time down a very different route, and it's far simpler, more conventional, you might say. It's pretty simple in terms of metallurgy. What you're doing now is, as you just said, is what's being done across the gold industry and other things. And in essence, you'll end up with two concentrates, one which holds one group of metals out of Gonneville and one which holds another. Is that essentially where you're going to land?
Yeah, no, exactly right. It's all back to simple, back to basics. And when you're trying to get a greenfield project going, a very large greenfield project going in this sort of metals price environment, obviously that's driven us to try to keep it simple, as lean and as low cost as possible. So we previously couldn't do that because the metallurgy just wasn't allowing us to achieve saleable product from the low grade, and now we've cracked it. So we've
let's stop there, because you cracked it. A skeptic might say, "Oh, Alex, this is very convenient. You've suddenly found sort of Willy Wonka's gold pasta or an economic project here. Why didn't you do this in the first place?"
Yeah, look, it's a good question, and we've had a team of metallurgists working on this thing now for about 3 years. So look, obviously we wish we'd cracked this 3 years ago, but I think there's a few things to consider here. The first is when we started, we were sort of looking at the high grade material that we found early days when we made the discovery 4 or so years ago. We said let's get a flow sheet that works for that. And then what we did is we found this huge amount of low-grade material surrounding those high-grade lodes. So we sort of said, look, that may require a different process. And we did some testing, couldn't really get it to work with just flotation. So we went down at that time the pathway of hydromet. I think the collective view at that time was from everyone involved, including international experts and people from all around the world who were looking at this project, was that they just didn't think that a 0.15% nickel head grade was ever going to upgrade to an 8% nickel concentrate. They thought that was pushing the boundaries, pushing the envelope for what flotation can achieve. So we went down the hydromet path, and that was probably 18 months, 2 years of
and that's an approach that's really aimed at the higher grade material, and it was something that you started when before you found the big lower grade resource.
That's right, and we were in a different market environment at that time as well. So nickel was at a $25,000 a ton mark. There wasn't this oversupply of Indonesian product in the market. And so there was actually an incentive as well to chase more value, build more processing to get more value. And obviously subsequent to that, so those two elements they've changed on us. The market for nickel is now oversupplied, so we need to, really strip back a lot of those ambitions around capturing more value. And really we put a lot of focus on, go back to that work of 2 years ago and can we find another pathway to generate saleable product? And we had, lots of people involved, but, we credit to those people, the tight-knit group of metallurgists that are working for us, as well as our labs. We've had 2 separate labs, working on this problem now for the last sort of 12, 18 months. And so, they persisted and they just kept experimenting. And lots of little small changes in flotation have resulted in the step change. So you can't sort of isolate one thing,
right? One
breakthrough. It is a newer set of reagents, a different way to run flotation in terms of agitation, conditions, and just determination, and lots of iterations, lots of experimentation.
So the bottom line of that is, by applying all these changes, that you've established that you can now extract low-grade nickel using a conventional flotation process.
That's exactly right. And then we generate those two concentrates that are just shipped to smelters, and we don't need to do any more processing beyond simple flotation.
So it really turns on the success with extracting low-grade nickel using a conventional flotation process.
That's right.
It's really about the nickel, isn't it? It's not.
That's right. Yeah,
it's not about all the other metals.
Copper has never been a problem. Palladium never been a problem. What's really been the problem has been the nickel
Right.
side. So
that's an important point, isn't it? It's not about the whole basket of metals that come out of Gonneville. It's all been about solving this problem called low-grade nickel.
Correct.
How do we get that out
Yep.
at a low cost? Flotation would be the secret if indeed it works, and you say that's the bit you've now established you can use.
And that's right. And it was also understanding what form the nickel's in, like what are the minerals, what one of the unique things about Gonneville that differentiates it from other low-grade nickel projects around WA, like Mount Keith, Yakabindi, is we have most of that nickel, even though there's a low quantity of it, most of it is in sulfide form. So that means it's floatable nickel. So there was a bias, I think, initially that because it was low grade, we would always have a large portion of it that was going to be unrecoverable or locked and therefore not, floatable. And so we did more and more investigations. We did lots of investigations into the mineralogy, really going to every corner of the deposit, trying to understand what is it about our nickel that makes it sort of, what do we need to throw at it to crack the code, and really realizing that circa 80% of it is in sulfide form, well liberated sulfides that could recover to flotation. That kept us motivated to keep going with the flotation, keep trialing different conditions, different reagents, and like I said, very happy to and credit to those guys involved who have gone and cracked it for us.
Now, coming back to why this is so important and why the market's got so hot and sweaty about it this week, put aside the metallurgy, as fascinating it is for the chemists among us, the issue here is that there has big economic implications, cost implications, yes?
Yeah, that's exactly right. So
what can you tell us about that? What you say this is really important. The market obviously agrees that it's important. How much is it going to save you?
Yeah, well, I think you've gone from a very complex flow sheet with lots of pieces, lots of capital required, lots of operating cost, down to something that's a fraction of the size, therefore lower capex, lower opex. So whilst we don't get as good a recoveries because we just won't have as much processing on the site, we'll take a small decrease in overall metal recoveries, say 5-10%. We've cut operating costs and capital costs by much more than that loss. So the overall impact to the bottom line, the overall impact to the margin or the what we'll make per ton is expected to be significantly higher than where we were 2 years ago.
So there's big capital costs and operating cost benefits to be had here.
That's right. So order of magnitude was about 500 million Australian dollars worth of capital. That was just to build that hydrometallurgical plant, to process the nickel.
And what's that as a percentage? What's the denominator in that equation?
So overall capex was about 2.3 billion. So you're talking sort of 25%, ballpark. Was 20%.
Right. Highly material amount of money.
Exactly. So you cut that sort of capex. Coming out is meaningful. It also reduces the hurdle for us to get into business. The initial capital cost. That it has always been the challenge for this project.
Such as your funding requirement, presumably.
Absolutely, because we've always known that once we're in business, once it's built, it will sit in such a competitive part of the cost curve. It'll always be able to produce and be profitable through the cycle, and not many assets can do that. Right? That's what makes this thing so unique. Is that it's not only just this different, unique polymetallic, large, ultra large resource, but it is going to be an open cut mining operation, very low cost. So that means it'll be profitable through the cycle and in the second quartile, comfortably in the second quartile.
So it'll bring down your operating costs in the process.
That's right. So, what we already thought was a very competitive asset in terms of low cost has just now become an even lower cost.
So you go from being in the middle of the pack, say top end of the second quartile, down to knocking on the door of the bottom quartile.
Yeah, well, I mean, the reality is there's sort of two worlds in PGEs. There's Russia, which occupies the first quartile, and then there's the South Africans, the Zimbabweans, with these very old, deep underground mines that occupy the remainder. We're going to sit neatly between the two, and now we've got downward, movement. We think on that position. So, we're like I said, we're looking like we'll be much closer to the Russia side rather than the South African side.
So moving on to the demand side of the project, Alex, do you think that all this these carry-ons, if for the want of a better description, with Trump and tariffs and the like, will that have an implication for Chalice and Gonneville?
Look, I think so. I think there is just this general sort of pivot away from green subsidies and green incentives, and so what we've seen is that, there was a rapid adoption of battery electric vehicles, and obviously those vehicles don't have any palladium in them. Our primary metal in our project is palladium. So we saw some demand destruction because, the vehicles, now, 18-19% of the new vehicles, globally are battery electric vehicles without palladium. So, but that number now.
So a hybrid vehicle still needs the palladium.
That's right. So any vehicle with an engine, so whether you've got a plug-in hybrid or an extended range EV or a classic, ICE vehicle, petrol, diesel, you've got palladium in that vehicle, and that's playing a critical role.
And that's the growth sector of the market at the moment, isn't it?
That's
EVs
right.
have obviously, the sales aren't doing what they were forecast to do a couple of years ago.
Hybrids are growing.
Hybrids are the hot space, aren't they? And hybrids need palladium.
That's right. Yeah, that's right. They need even more palladium because you're dealing with stop-start conditions. The engine has to be even more efficient, even leaner, even lower emission. So, and it has to operate outside its sort of comfort, efficiency limit. So yeah, you've got even more palladium needed for these hybrid vehicles and hybrid growth.
So the trend is now your friend again.
Exactly. And a lot of people think, in China, they're all driving battery electric vehicles. That's not true. About 60% of BYD's sales are hybrid. So 60% of BYD new cars today have a motor in them, have an engine in them.
Which means they have palladium, a lot of palladium.
Exactly. So the idea that there's going to be this sort of rapid decline of internal combustion, it's just been overdone. And so I think, with Trump in the office, with the general move away from what is a very, very high cost, battery electric vehicles are higher cost. So you've got cost of living pressure, you've got the subsidies are really sort of tailing off, and we think that's going to drive people to hybrids, which we think actually is a better solution as well. Largely, if you think about the amount of raw materials needed to produce a battery electric vehicle, the amount of new mines that need to happen to produce a battery electric vehicle. Obviously, we're going to be producing nickel, copper, and cobalt as well. So we love that, but at the same time,
there's less lithium in these hybrids, presumably.
That's right. So all you've got is a smaller battery. So a smaller battery means we're not digging up as much battery materials, but we also have a small little petrol engine typically, which has got a palladium-based catalytic converter in it, and I think that's where that sort of best of both worlds, sort of saying comes around. I think because you get the benefit of the engine being there to give you a very long range. So you don't need to be worried about, the anxiety of being able to plug in and charge. You worry about your battery life. But you also, for those short trips around the city, you can run on battery.
And they are being marketed as a have your cake and eat it scenario, aren't they?
Exactly.
Given that where that sort of trend is now going and what it means for you, what happens next for Gonneville, Alex? What's the next thing to bring this project to life?
Yeah, so we're towards the tail end of the pre-feasibility study now, so that'll be completed in middle of this year. So that, we've really front-loaded that PFS with all the test work. Obviously, as we've reported this week, we've really made sure that the processing assumptions and sort of the crux of the project in that flow sheet and the plant is going to be very, very well understood. We obviously made a big leap forward with the MET as part of that, but we're also doing lots of work on things like infrastructure and tailings and all the other obviously things that are needed, mining, design, et cetera, to complete a pre-feasibility study. And at that point, we're really expecting the scope of the project is locked. We've got a case. We've been operating in a very sort of divergent sort of mode. We've had lots of different scenarios, open pit, underground, various scales, various flow sheets. we've now really crunched it down to, one preferred case. We're going to lock that down this quarter, and then we're going to complete.
When you say one case, you mean one set of operating costs in effect?
Exactly. One throughput, one set of costs, one flow
so it's
sheet,
not a moving target.
One set of products. Yeah, and that's taken some time, and I think that's what's hard is that a big project like ours, we only found this thing a few years ago. And so the market, I think, asking the market for patience is always difficult, right?
And what are you detecting from the state governments and the authorities in terms of your approval process?
Yeah, look, I think the support is overwhelming. So that there's been a very unified message, state and Commonwealth, that big projects like this, projects that can really move the dial in critical minerals and sort of national strategic sort of scale projects, need the utmost priority of government. So we've been very happy. We've had major project status awarded from the federal government, strategic project status or lead agency status from the state government. So we're getting every possible support out there, and I'm very grateful for both sides of government that they've been recognised our project as being so unique and so significant in terms of scale. So look, we've begun the approvals and the permitting process early last year, based on sort of loosely what we thought we were going to do. That once we finish the PFS, really it becomes around getting that scope now modelled and through all the environmental modelling, environmental impact sort of submissions towards the end of this year. So it all is sort of coming together for FID ready around about 2027. So there's lots of work happening in the background. Whilst we've been a little bit quiet in terms of what we've said publicly, obviously this week was a big announcement and a big game changer. We've been absolutely razor focused on getting this to production as quickly as possible, and obviously the scope now, the flow sheet and that being well understood now allows us to get on with the other bits, which is also looking at offtake agreements, sort of the strategic sort of relationships we need with smelters who are going to take our copper and nickel.
Could those strategic relationships involve possibly the sale of a stake, circa say 20%? Will you do a Bill Beeman? We had Bill on this podcast a couple of weeks ago, and Bill was taking us through the Woodlawn project, and he was talking about the option of selling circa 20% of that copper zinc project in New South Wales. And Bill's making the point that if he were to get a good offer for the right price, he'd be open to selling a part of it and recycling the capital. Is that a scenario that might apply to Chalice?
Oh, look, we'll always keep our options open, but I think when previously we were looking at a $1.6 billion upfront pre-production capital requirement, that's a big hurdle, right? Now we've simplified the flow sheet, taken a lot of capital out. We've also brought the scale down slightly. We're going to have a much more manageable initial capital requirement. We've also got the ability with our project that we can phase the capex out over time. It's a very scalable, flexible, adaptable asset in that regard.
So what you're saying is we could have a phased-in approach where you gradually increase the production rate and the capacity.
We don't think now it is driving us as much towards selling down a minority position in the asset as we tried to do a couple of years ago. So I think now that really, this is now a project that, any junior or any mid-cap, company can go and execute. So I think that we've really broadened the appeal to lots of different strategics and partners and off-takers out there. But the drive to sell down is probably just not there anymore. And particularly where metals prices are, you have to say, we're really at the bottom of the cycle. It feels for nickel and palladium in particular. So it just feels like there's no need to rush any.
So do you feel like you're back in business here?
Yeah, look, I think that's exactly right. We're certainly a lot more enthusiastic about the new flow sheet, and credit to the team again for making that breakthrough, and I think credit to some of our major shareholders who have stuck with us. It's not like we've had a total change of the register and the top 20 shareholders. We still have essentially the same top 20 shareholders. So very, very grateful that they sort of stayed the course and believed in us that we were going to, get there. And certainly I think it's positioned well now. I do feel like we're back on track. And it's a much more, easier pathway to go and construct and operate this project now. We've got a COO starting next month, so we're really sort of now, I think, positioned exceptionally well. So yeah, very much back in business.
Back in business. Alex, thanks very much for your time. It's been fantastic to have you on the Whole Truth podcast.
Thanks, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.